Okay, so thank you very much, everybody, for joining us today. And it's my great pleasure to introduce Ekaterina Svetlova. And Ekaterina today will give a talk titled The Epistemic Ethics of Sales in the Investment in the Industry in the Era of Artificial Intelligence. And so thank you very much, Katerina, for accepting our invitation. The topic is really exciting. And so without much further ado, we can start the meeting. And so the floor is yours. Thank you very much.
Okay, good. Thank you. I'll share my screen. Okay, so I hope you can see it well, right? Okay, thank you very much for inviting me and giving me this opportunity to present my current research on ethics of AI in finance. And first, I would like to start with the description of the problem. Right. So as we all know, AI is increasingly used in various types of financial services, in advisory, on investment strategies, in optimizing portfolios, in sales of financial products, also in trading. And the major problem that I have identified with respect to those services or AI use in those services is related to the question of transparency, because ethics as well as regulators require, as we know, explainable and transparent services to clients. And this is a huge problem in practice. Right, why it is a problem? Because ethics and regulators base their approach on the full disclosure requirement of a full disclosure. So they assume that decisions should be made by an investor based on information they possess, and this information should be as full and transparent as possible. However, in the field of AI-based financial services, this is challenging, or I would say nearly impossible. So first of all, AI-related disclosure is very often difficult for providers because this would be contrary to the idea of know-how, which is often proprietary. So they are not obliged to disclose all information they have about their algorithms or their workings. Also, clients often lack financial knowledge, and even if providers try to explain how their algorithms work, often they reduce then the amount of information they provide because clients simply cannot understand what they are trying to explain to them. And the next problem is, of course, the problem of complexity and opacity of algorithms discussed in the literature as knowledge risks related to AI. So there is limited knowledge about data. The data might be biased or faulty, and it is difficult for human users to identify the problems with the data very often. Also, a lot of efforts go into cleaning and hygiene of data. Also, it is not known how algorithms might behave in unexpected situations. For example, if they face unexpected events like black swan events, which were not in the data on which those algorithms were trained. And also, the very famous problem is the problem of black box, meaning that algorithms might make decisions which cannot be very well explained by humans or understood by humans. Right, so this is a kind of a problem. So on the one hand, this is a requirement of a full disclosure, and this full disclosure is not possible. So this requirement kind of doesn't make sense. And to illustrate the problem even more or specify the problem, I would use an example of an AI program that managed clients' money and was not successful. So this is a case that has been discussed in the press quite prominently a couple of years ago when a tycoon, Samatur Ali Khan, trusted 2.5 billion US dollar to an algorithm, a so-called K1 supercomputer. This computer was used machine learning to analyze sentiment in the markets. And so it analyzed news, social media posts, made conclusions about the sentiment, and then traded upon those sentiment signs. So the potential client, was fascinated by the idea and trusted a lot of money to this company, Tyndaris. This is a hedge fund that powered this supercomputer. And then the program, however, did not live up to expectations. It was not successful. And on one single day, it even destroyed or lost 20 million US dollar. It was the February 14th, 2018. And then the client terminated the contract and sued the company. And what is interesting is that the lawsuit was not about this hedge fund losing money, because of course each client in finance, in investment, can lose money even if it is managed by humans. The problem was the misrepresentation of computers' capabilities. So supposedly the salesperson of Tyndaris overstated what this machine learning algorithm can do. And so the relevant question for us would be, are there ethically relevant and reasonable requirements for communication to a client who is buying and relies his money on AI-supported financial product? Right, and there are also other cases discussed in the press when, for example, one company did not disclose to its clients that they are using trading algorithm, or that they created an additional exposure for investors or additional risks based on AI. And so the presentation of AI was materially misleading. So a lot of issues related to usage of AI in finance is not just about human or AI. It's also about fair communication of what AI can do. So miscommunication is ethically problematic because it can create a kind of sense of security on the side of clients, and they might have too high expectations or wrong expectations about what this algorithm can do for them. And so as a consequence of those considerations, we can identify communication between salesperson and customer as an important field to which ethics should pay attention. So a salesperson informs a customer about what this algorithm can do for them, customers, what this algorithm can do for them. However, this communication should be ethically correct. And the question is how to sell AI-based financial products in an ethically correct manner. So in other words, are there specific ethically relevant requirements for the communication to a client who is buying an AI-supported financial product? Right, so this is a kind of ethical problem of misrepresentation, and this ethics is directed very much to, or is related to ethics of sales. Ethics of sales exists as a field of business ethics. However, what is interesting, this field of ethics recognizes that AI becomes an important tool. However, the ethics of sales primarily looks at ethical issues related to how salespersons use AI for some selling purposes. However, there is no literature on how ethics should address the issues related to selling AI-based financial products or any type of AI-based products, right? So AI is kind of, if AI is a part of sales process, ethics of sales starts to look at it. But if it is about AI-based products, ethics of sales has not paid attention to that. And this is, I think, an important and an interesting field to address. And to address this issue, I suggest a complementary approach. It means that on the one hand, we have the so-called ethics of knowledge acquisition. So we assume that the situation in which a salesperson and the customer finds themselves is a situation of knowledge asymmetry, meaning that sales or portfolio managers or any type of finance professionals have a full knowledge of their algorithm, and the client is kind of unknowledgeable. And this asymmetry should be removed in order to make clients to make a good decision. And knowledge limitations about algorithms that I mentioned at the beginning are supposed to be challenging but surmountable, right? So we can always gain enough knowledge about the algorithm. So, and it is a kind of obligation of an AI providers and users to understand the algorithm in full. And it's what also regulators kind of require from AI providers and users. And so basically it is about communication of what is known about the algorithm and its decisions, focused on reduction of information asymmetry. However, I would like to highlight that it is also important to embrace ignorance in ethical communication, right? So ignorance is a fundamental aspect of AI design and use. And I would say that those challenges are unsurmountable, right? So what is unknown about machine learning algorithms used in finance might stay with us for a while. We find ourselves, or salespeople and customers find themselves rather in the situation of non-knowledge symmetry, meaning that both sides have particular non-knowledge. However, it might be of different nature. So sales people or programmers might have a different type of non-knowledge than clients, but we will not find a situation in which full knowledge is on the one side and full ignorance on the other. Right, so ethics and regulators should then recognize the centrality of ignorance and the importance of negative capabilities as ability to cope with this uncertainty and knowledge limitations. So basically, communication of what is unknown about the algorithm and its decisions is as important as communication of what is known. And so it is why I call it complementary approach, because I would not say that nothing, absolutely nothing is known about algorithms. No particular aspects can be known, but we also should acknowledge our non-knowledge and communicate it properly to customers. So now, just to explain what I mean by that is, first of all, what can be communicated about existing knowledge. Right, and there are good guidelines already, for example, by the European Securities and Market Authority. They require that the client should be notified that the investment product relies on or is supported by an AI algorithm. And this is a feasible requirement that could be fulfilled by all AI providers or can be communicated by any salesperson. But however, interestingly, even this simple requirement is very often not fulfilled by providers of AI-based products. So, for example, a small study of 5 biggest US robo-advisors showed that very often it was unclear whether platform use AI or if it used it for which purposes. So the second requirement related to what is known could be related to clear outline of responsibilities assigned to humans and AI in the investment process. And this is also very often required also by regulators. So AI providers should clarify whether they use a human in the loop process, meaning that if AI makes a decision, those decisions are checked or overlooked by humans, or not overlooked, but checked by humans for its feasibility, and only then this final decision is made. Or whether the product provider use so-called human on-the-loop approach, as it was in the Tyndaris case. AI made the decisions, and human kind of had a control function, or they were decision observers instead of decision makers. And very often also this is not clearly communicated by hedge funds, for example. And in the Tyndaris case, it was unclear for who, for example, made the so-called stop loss decisions. So the client, so on the day that I mentioned, on which the AI algorithm lost 20 million US dollar, it was not clear who decided about the threshold of the stop loss. So the client was sure it was a computer using its super capabilities to decide about the optimal level of the stop loss. Whereas in the lawsuit, Tyndaris said, no, it was a human task. So it was not clear in this situation who is doing what. However, it should be clearly communicated, and it is possible to clearly communicate this. Right? And I looked into prospectuses of some ETFs or some funds that use AI to manage financial investment strategies. And I could not find many who disclosed even this simple information about whether they use an algorithm, whether they what is the role of this algorithm in the investment process. However, I could find one example which could represent the best practice in the field, because you can see that in as this fund in its prospectus clearly described that it applies machine learning. So it's used to forecast the next year's earnings for each company within the investment universe. So it's a use neural network. It is based on supervised machine learning techniques. So there is very detailed information about the algorithm and also about the role of humans with relation to AI. So, for example, they state that prior to purchase, the sub-advisor, a human, would perform a final review to ensure that the model is not receiving erroneous information, and whether to check whether the humans have more information that could be overlooked by the model. So, for example, if they know there is a CEO change in the company or whatever, or bankruptcy filing, a case of criminal financial crime, and so on. So it cannot be picked up by the algorithm, but it's important for the final financial decision. And then the sub-advisor, the human sub-advisor, can put a hold on considering the particular company for investments or remove it from consideration altogether. So the humans can clearly overlay the suggestions of an algorithm. Right. So this is an example of what the proper communication would be or could be related to information that is very well known and can be clearly communicated. However, the most interesting question, I think, is about how to communicate what is unknown. And we know from some research in social studies of finance that, but also some recent research on AI, that ignorance is a defining feature of algorithmic practices, right? So ignorance is indeed a fundamental concept if we try to understand practices that involve AI. And this particularly relates to finance, and I list here some prominent work that stated that even programmers and traders that use advanced algorithms struggle to understand or to have a full knowledge of what is going on, how algorithms work, which effects they produce, and which effect those algorithms have on the market. And as a result, result for ethics, I would say, those consequences should be clearly considered. And I would say that one most important consequence would be that salespeople, investment managers, programmers, and so on, who have contact to clients, should first of all rethink their rethink about what or change their attitude towards not knowing. So, of course, they know that there are limitations to their knowledge about the algorithm, its effects, but this non-knowledge should not be avoided or hidden, but they should find a way to disclose what they don't know. And this would be, I think, an important ethical requirement in this situation. Because this, so the providers of AI services or AI-based financial services themselves should disclose this non-knowledge, because it would reduce the false sense of security on the side of customers, and they should develop those negative capabilities in themselves and in customers, so the readiness to acknowledge and grapple with not knowing. And this is an important ethical move, I would say, because this would enhance transparency, honesty, and trust. Yeah, so now if we say that clients should be informed about the unknowns and uncertainties surrounding algorithmic operations, what exactly would it mean? So there, as I said, there are three types, basic types of non-knowledge related to AI algorithms. Non-knowledge related to data might be disclosed about the quality of data, various risks related to data connectivity, and so on. So non-knowledge related to data should be disclosed. Non-knowledge related to algorithm response to major surprises and black swan events. Of course, the problem of overfitting has been discussed at length, but maybe the programmers and providers can better know or explain what are the limits of algorithms adaptability and what can humans realistically do in such situations, right? Should it be a kind of circuit breaker, the full stop to working of the algorithm? Would it help how to identify stop losses? So how to behave in situations of such unexpected events. And yeah, so first of all, to identify what providers of services do not know themselves. So it should be somehow documented and better understood. And finally, no knowledge about what guides algorithmic decisions. So we know that there is a lot of work on explainable AI, but we also all know that each method of Xi has also its own limitations. So it does not fully explain the decisions made by algorithms. So the client, so it's important that the salesperson or investment manager determines the level of explainability with which the customer is comfortable. And then maybe explain to them the position of the AI product on the so-called predictability interpretability frontier. And so this is kind of a tool that suggests that there is a trade-off between accuracy of algorithmic prediction and decision and interpretability of AI tool. So it could be used for discussions with clients of limitations of AI explainability and finding the level at which the customer says it is kind of comfortable to invest. And it is important that the client is aware of this trade-off and that this trade-off is discussed with him and her. And also each audience to which algorithmic capabilities are presented might have its own knowledge limitations. So the regulator might have different knowledge limitations in comparison to a lay client. So it's important to do some work on audience-specific limits of explainability. And I think this is also a very important direction to pursue. And so to conclude, I would just conclude with suggestions for regulators and also ethics. I suggest that ignorance is an important trait of AI design and use and should be a key part of communication about AI-based financial services. How to do that? So providers of AI-based financial services should document and communicate both. They should communicate what is known. So, for example, key technical and legal details about the algorithm. So what is the nature of this algorithm, the data it used, how it was tested, the extent of human oversight, but also what is unknown, for example, limitations of explainability. So what is not known even to those who provide those algorithms. This is important to be disclosed. And yeah, so we should facilitate work on and embrace knowledge limitations and avoid concealing ignorance. So this is kind of, yeah, the major message of my talk, and I'm happy to discuss. Thank you very much.
Thank you very much, Ekaterina, for this very interesting talk and all the inputs and the insights that you gave us. And we can now open the debate. And I mean, there are two possibilities. You can raise your hands on the menu at the bottom of the Zoom menu. And otherwise, I mean, you can also raise your hands in the video, and I saw it, and I see it. Okay, so I have questions. Maybe I can start so to break the ice. And yeah, that's very interesting. I mean, the part on uncertainty and not knowledge, I would say. And of course, probably you have different types of unknowns, and um, and so I was wondering if there are unknowns in that case that would make the algo decision very difficult uh, to make transparent in this, or more transparent than they actually are now, in the sense that um, there are, of course, black swans, as you mentioned, and but also in that case, we know that there's an area where something very bad can happen. And so we have a kind of knowledge on that particular gray areas. But I was thinking of the inner machinery of the neural networks. And so in that sense, there are parts of the algos that we don't understand and that are very difficult to make explainable, and nevertheless they can be wrong, and so they are basically using statistical methods to create correlations among indexes, assets, and so there's a kind of probabilistic reasoning, and so that's very risky in that sense. And so we can't. It's very difficult to understand what's happening inside the neural network in that sense, and so to fully rely or simply rely on those mechanism and algorithm can be very risky. And so
yes, exactly. And my point is that it should be communicated. That it should be communicated what exactly is not known about working of such algorithms, because very often this is kind of hidden, or salesperson would avoid such communication. And but it is important not just to say we don't understand how it works, because there are efforts to explain how AI works, these explainable AI methods, but still they are limited. And so the communication about those limitations of explainability should be much more open than it happens now. So this is basically my point. I don't,
Yeah,
yeah. So of course there would be unknown unknowns in the sense that maybe providers of AI-based financial services don't know particular things themselves and don't know that they don't know.
yeah,
Okay, this is fine. Yeah, so we cannot change that. But there is a lot of known unknowns which are simply not communicated.
yeah,
And they so for example, if they use a particular form of explainable AI that tells them which factors were taken into consideration by the machine to make a decision, right? So they could open it to the client and say, okay, so since those factors, yeah, were taken in consideration. However, we still don't understand and don't know this, that, and ABC, you know. And
yeah.
this is the point.
Yeah, see, so a brief follow-up. So you mean that uh, so they this kind of information should be open to the clients,
Yes.
um, only the clients or public? Because in essence,
Okay.
I'm revealing bits of my strategy,
Mm.
and so I could give hints and advice to my competitors, for instance, by saying, I'm doing this kind of
Yeah, so
procedure.
yeah, what I mentioned at the beginning, it's why transparency in financial sector is so difficult because it's a proprietary knowledge that providers don't want to share. Um, However, I know that some hedge funds tried to communicate explainable AI methods that they use to their clients. However, it was very difficult because a client simply didn't understand and lacked the basics of what they are talking about. So, but if we are okay, taking ethics as a field of philosophy, which is very often idealistic, you know, and you know, so if we think about what should be done ideally and normatively, then I think that knowledge about the algorithm should be communicated along the what is known. But yeah, of course, if we go to practical implications, this might be impeded by proprietary or wanting to not to share proprietary knowledge and so on.
Yeah, because in that case, I mean, you can give a kind of competitive advantage to your
Yeah, yeah. So they
competitors.
can back engineer the algorithm or whatever.
Yeah.
Yeah.
So yeah, it's not easy to see how can you.
Yeah, but still, I think the work should be done in this direction and to see what can be communicated also about yeah, knowledge limitations related to the algorithm. But at the moment, as far as I understand, this work has not been done by practitioners at all. Or by sales. The aim is to communicate about yeah, advantages of AI, but not such knowledge risks.
Okay. I don't know if there are questions coming from the people connected. Yeah, see, so maybe we can continue our discussion, me and you. And yes, um, I was thinking also, watching your slides, probably an interesting case study would be looking at those, um, the performances of those
Mhm.
AI-powered funds and companies, in the sense, are they performing better or worse than competitors that are not using or relying so much on the artificial intelligence? And maybe we could be surprised discovering that they're not doing so well. at least at the moment. Probably, I mean, we can work on the details of the neural networks and probably improve them. But
Which index exactly do you use to observe the performance?
yeah, I mean, I can give you the link if you're willing to see. I mean, the performances of these. I mean, at least the known companies, the companies that are declaring that they're using artificial intelligence to boost their decision making or to simply make decisions uh, on investments and or to pick the stocks. And but there are, I mean, a few studies coming uh, from those companies that seems to suggest that they're not doing so well right now. And so maybe that means that there are at least now strong limitations in what artificial intelligence can achieve in in finance and stock markets especially. And, and so I don't know if it's an hype.
Yeah, but how to relate it to knowledge limitations? So this is a question. So
Yeah,
would you say that this performance is not good because providers and users of those algorithms have higher ignorance about those algorithms and just blindly use them, or?
yeah. I mean, in that case, the companies are not disclosing the details of the algorithms. So, but the question is how much we should use artificial intelligence in finance if if they're not doing so well. That's I mean a side question, of course, and it's not on um,
Yeah, okay.
maybe there is too much emphasis on the power, the prospects of artificial intelligence in stock markets, especially. I mean, not I mean, I'm not meaning the entire finance, the whole financial systems, but probably in
Right.
stock markets. And so maybe they should also reveal this piece of information to the client. So what
Yeah,
I'm
so
doing,
I tried, so I took the list of funds that use AI and went through their prospectuses. And it is very difficult, first of all, to find any documentation. And secondly, so the examples that I showed in my slides, this was rather an exception, that you get such a detailed process described in the prospectus. Otherwise, could maybe be very short mentioning of AI or not at all.
yeah,
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 this is so information even on what is known is insufficiently provided at the
yeah,
moment.
yeah,
But if we go beyond it, the requirement to provide information of what is unknown, so it will be kind of a huge challenge. But as I said, so I consider ethics as a normative science. So we should think about what ideally should be done or be required from the ethical perspective.
yeah. And maybe a lot that at that point you should also reveal your performances. I mean, the performances of AI-powered strategies. Because I'm using AI, and those are the performances of the the strategy using AI, and so the client can make decision more, I mean, aware of the maybe specific outcomes that he can get from using artificial intelligence. Maybe that would increase our knowledge about the characteristics of the sales made by artificial intelligence. So sales, or I mean, also you can buy using artificial intelligence, but maybe they are performances that are different from those produced by humans. And maybe you look at those performances in a different way if you know that those performances are given by artificial intelligence, and you should know
Right.
not only that are using algos, but what are the performances produced by those algos.
Yeah, so it's a good idea. So I might have a look.
Okay.
Yeah, but I cannot say it's now upfront because I think we need more details indeed to be able to compare.
Yeah.
Yeah.
Yeah. Okay. I don't know if there are questions from the audience. So I don't see hand raised. Okay. So I think we
Good.
can thank again Ekaterina for being with us today. It was very interesting, Ekaterina. Thank you very much, and I hope to see you soon on finance
Yeah.
on another occasion.
Yeah. Thank you very much for giving me the opportunity to present. Thank you.
My pleasure. And
Okay.
so there are people thanking you from the audience, and okay. So I thank Ekaterina again and all the people connected today. And I hope to see you on the next meeting on the Finance Online seminars. And
Yeah.
bye.
Okay. Thank you. Bye bye.